Brad Garlinghouse just went on record with something that should make every XRP holder pay very close attention. At XRP Community Day, Ripple's CEO laid out exactly what's happening behind closed doors with regulators, institutions, and infrastructure that most people aren't connecting yet. I've pulled the most important clips from the entire event, and what you're about to hear changes the timeline everyone's been assuming. Stay with me because this is time sensitive. XRP Community Day just wrapped, and the announcements coming out of it reveal something critical. Ripple didn't just secure one regulatory approval, they now have dual layer oversight at both state and federal levels. Something no other stablecoin issuer has achieved. That matters more than it sounds, and Brad breaks down exactly why. But beyond the licensing news, there's something bigger brewing with the Federal Reserve. A specific probability on the Clarity Act and Brad's clearest statement yet about what XRP actually means to Ripple's entire strategy. By the end of this breakdown, you'll understand why 2026 might be the year the infrastructure setup phase ends and deployment actually begins. If you're holding XRP or watching this space closely, show some support and let me know you're here. And if this is your first time on the channel, consider subscribing. We're tracking every major development in real time, breaking down what actually matters versus noise. Let's start with what Ripple just secured from the OC. Brad was asked directly, what does this banking license enable today, and what changes when the conditional provisions are removed? Here's what most people are missing. Ripple originally launched RLUSD under the New York Department of Financial Services Trust License, which they viewed as the gold standard at the time. Now they have both state-level and federal-level oversight through the OC Charter. Why double down? Brad's answer is straightforward. Ripple is focused on institutional flows, and institutions demand the most rigorous compliance possible. The OC Charter provides better bankruptcy protections for reserve assets. It clarifies RLUSD's position under the Genius Act framework, and it cements Ripple's position as the first stablecoin issuer with dual-layer regulatory oversight. That's not symbolic, it's structural. When institutions evaluate counterparty risk, this kind of regulatory foundation removes friction. But here's where it gets more interesting. Brad didn't dodge the speculation about what comes next. There's been commentary about a Federal Reserve master account, and he confirmed they find it compelling. He wouldn't detail future plans, but the key phrase was, "There are things we may do in the future." That's not a denial, it's a roadmap tease. But the license itself isn't the full story. What Ripple's considering next is even bigger. Ripple recently sent a letter to the Federal Reserve, not a proposal, a letter positioning how payment infrastructure should evolve. Someone at the event broke this down visually. The Fed's digital bridge concept. The old way of moving value was complex, multi-intermediary, slow. The new model Ripple's describing is direct connectivity to the Fed using upgraded rails. Ripple isn't pitching replacement, they're pitching an upgrade. A bridge, not a demolition. This matters because it signals how Ripple is positioning itself not as a disruptor trying to bypass traditional finance, but as the infrastructure layer that makes traditional finance faster, cheaper, and more efficient. That framing is critical for regulatory acceptance. The Fed doesn't want to hear, "We're replacing banks." They want to hear, "We're making banks better." Ripple's clearly learned that language, and Brad's careful mention of the master account possibility suggests conversations are happening at levels most retail investors don't see. While Ripple's building these infrastructure connections, the market itself is sending mixed signals that confuse most retail investors. Brad used a framework that's worth understanding. 0 to 1 versus 1 to 100. He said 2025 was the 0 to 1 year. That's the entrepreneurial phase where the concept proves viability. We saw that with ETF approvals with BlackRock CK's Larry Frink talking openly about tokenizing assets on blockchains, with crypto moving from fringe to mainstream capital markets. Institutions aren't just exploring blockchain for speculative crypto exposure anymore. They're using it for settlement efficiency, cross-border liquidity, and treasury management. But here's the part Brad emphasized. Despite all that progress, crypto markets have struggled over the last 3 to 4 months. Prices dropped while fundamentals strengthened. Brad called it a conundrum, and he's incredibly optimistic about 2026 because he's watching the infrastructure layer, not the price charts. This is the gap most retail investors miss. Before, institutions might have let their customers speculate on crypto assets. Now, institutions are integrating blockchain as core infrastructure, the settlement layer, the liquidity layer they didn't have before. That's how you move value from one place in the world to another instantaneously using something like the XRP ledger and Ripple's technology. Brad's point, retail is focused on prices going down today, but institutions are preparing for adoption that kicks off this year. And here's the key insight. These large financial institutions have been piloting and testing for years. They're not starting from scratch. They're waiting for the starting gun. If you want to catch these shifts before they become obvious to everyone else, subscribing keeps you ahead of the curve. But here's what retail is missing about the timeline ahead. The starting gun Brad's referring to is the Clarity Act. Once that passes and gets signed into law, it doesn't mean everything happens overnight. There's still rulemaking, there's still attorney review, but it gives institutions the regulatory framework to say, this asset now fits in the specific bucket we needed for this specific use case. Let's move forward. Yes, XRP already has clarity from a judge thanks to the Ripple SEC case, but institutions need congressional clarity. They need it codified in law, not just case law. That's what unlocks the institutional deployment that's been in testing mode for years. Brad's talking about a shift from exploration to execution. Institutions have legal teams that won't greenlight deployment without that legislative clarity. Even if a court ruling exists, the risk tolerance is different. The compliance requirements are different. So when the Clarity Act passes, it's not about new interest. It's about unleashing existing interest that's been held back. Do you think institutions are actually ready to deploy at scale, or is this another delay cycle we've seen before? Drop your take in the comments because there's genuine debate about whether the infrastructure is truly ready or if we're still in extended testing. And speaking of that Clarity Act, Brad just gave a specific probability and timeline that should be on everyone's radar. Brad was asked directly, do you see the Clarity Act passing this year and what impact might it have? His answer was unusually specific. He gave it a 75% probability that by the end of April, the Clarity Act is not just back on track, but very close to getting signed. That's bold. He acknowledged his natural optimism as an entrepreneur, but he also pointed to real movement. Ripple's chief legal officer was at the White House the day before this event. There's active conversation happening between the White House, the banking committee, and the crypto community about bridging the gap. Brad expressed frustration that the bill stalled when Senator Tim Scott, chairman of the banking committee, paused the markup process, but he emphasized that the version Scott was preparing had overwhelming support from the crypto community and significant banking support. The issue wasn't lack of consensus, it was timing and some concerns from parts of the banking sector. The White House is now pushing hard to get it moving again. Brad believes those conversations yesterday were constructive. End of April, 75% confidence. That's the timeline he's working with. If he's right, we're talking about 8 to 10 weeks from now. That would put regulatory clarity in place heading into the second quarter of 2026, which aligns with the deployment timeline Brad's been hinting at. But regulatory clarity is just one piece. The bigger shift is how Ripple itself is evolving beyond just being labeled a crypto company. Brad made an analogy that's worth sitting with. He moved to Silicon Valley in 1997 during the earliest days of the internet. Back then, People called Amazon an internet company and Yahoo an internet company. But over time, the market realized Amazon wasn't an internet company. It was a commerce company that used the internet. Yahoo wasn't an internet company. It was a media company that used the internet. The internet became pervasive infrastructure, not a category. Brad believes the exact same thing is happening with crypto and blockchain. When he talks about Ripple, he rarely refers to it as a crypto or blockchain company. Instead, he thinks of Ripple as an infrastructure company, almost a platform company around financial services. It happens that they leverage crypto and blockchain to deliver solutions better, cheaper, faster, and stronger. But in the years ahead, we won't talk about these companies as crypto first. Companies that do will miss the bigger opportunity. This reframing is strategic. Ripple isn't trying to win the best blockchain competition. They're trying to become essential financial infrastructure that institutions can't operate without. That positions them differently in conversations with regulators, with banks, with payment providers. It's not about selling blockchain, it's about solving problems that happen to require blockchain rails. We're covering this transformation as it unfolds, and the next 12 months will define whether that strategy works at scale. Subscribe so you don't miss what happens next. And this platform approach connects directly to something Brad said about XRP itself that should end the debate once and for all. Brad was explicit. He wants every single person in the XRP community to know XRP is the North Star for Ripple. It's their purpose. When Ripple thinks about Ripple payments, Ripple Prime, Ripple Treasury, Custody Solutions, or RLUSD, every single product is focused on how they can drive utility, trust, and liquidity around XRP and the XRP ledger. This isn't vague. Brad listed specific examples. Ripple Payments enables payments on the decentralized exchange with permission domains. Ripple Prime uses XRP for collateral and lending. Ripple Treasury integrates XRP and RLUSD within treasury management operations. Every product line is designed to increase XRP's velocity, its liquidity, and its institutional trust. Brad described Ripple as a platform company for financial infrastructure, but he emphasized that XRP is at the heartbeat of that platform. This is the clearest possible rebuttal to the FUD you still hear occasionally. Ripple doesn't care about XRP or Ripple will abandon XRP. Brad just said on record that Ripple's reason for existence is driving success around the XRP ecosystem. If someone can't accept that after hearing Brad state it directly, you're dealing with someone who won't accept reality regardless of evidence. Brad also went further. He said, there's a chance, maybe more than one chance, for a trillion-dollar crypto company to emerge, and he believes Ripple has the opportunity to be that company if they execute well in partnership with the XRP ecosystem. Think about what a trillion-dollar valuation would mean. If Ripple genuinely solves cross-border payment friction, settlement inefficiency, and liquidity problems at scale for the largest financial institutions on the planet, they won't just be a successful company, they'll be one of the most valuable companies in the world. And if XRP is the foundation of that, the implications for holders are obvious. But this isn't just theoretical positioning. The ecosystem Ripple and XRP have built is undeniable. Look at the network map. Banks, regulators, payment providers, tech partners, investors, international foundations, all connected to Ripple and XRP. Scams don't build ecosystems like this. Bitso, for example, processes 10% of all remittances between the US and Latin America. That's real volume on real rails using XRP. We're talking about 82 billion in remittances last year, and Bitso is facilitating a meaningful slice of that with Ripple's technology. Or take Trengalo, which connects to 12,500 SWIFT banks across 130 countries, supporting around 80 different currencies. You can move XRP and RLUSD through Triangle's infrastructure. Then there are infrastructure providers like DTCC, AWS, SAP, CME Group. Major institutions like SBI, Santander, Bank of America have tested or integrated parts of Ripple's offerings. This isn't speculative. It's operational, and the list expands this year. But one partnership announcement might be the clearest signal yet about where this is heading. Ripple just announced that Aviva Investors, one of the largest asset management firms in the world, is tokenizing assets on the XRP ledger. Aviva manages $300 billion in assets. Let that sink in. This isn't a pilot with a small regional player. This is a top-tier institutional asset manager choosing the XRP ledger as the infrastructure for tokenization. Real-world asset tokenization is the next major wave, and Ripple is positioning the XRP ledger as the settlement layer for it. Brad mentioned this announcement as part of Ripple's continued focus on the institutional opportunity. Ripple isn't chasing the consumer opportunity directly. They're partnering with or investing in companies going after that. But on the institutional side, Ripple is building everything in-house around XRP. The Aviva announcement is validation. It's proof that when major institutions evaluate blockchain infrastructure for serious use cases, they're choosing XRP Ledger. And this creates momentum. Look at what happened with Vanguard. They initially resisted, but when their 50 million customers demanded access to crypto ETFs, Vanguard eventually allowed access to other institutions' ETF products. Customer demand forced their hand. Now apply that logic to BlackRock CK, to Fidelity, to other major asset managers who haven't yet launched XRP or Solana ETFs. If customer demand continues growing, they'll have to provide access or lose customers to competitors who will. People don't have just one brokerage account. They'll move assets to whoever gives them what they want. This is the dynamic Brad is describing. Institutions are no longer gatekeepers deciding what customers can access. Customers are demanding access to these assets, and institutions are responding. This might be the only window in financial history where retail has the chance to own a piece of the new financial infrastructure before institutions fully dominate the market. We've never had this opportunity before. Usually, infrastructure is built, controlled, and owned by institutions long before retail even knows it exists. This time, the asset that powers the infrastructure is publicly available. Which major institution do you think announces an XRP integration or product next? Drop your prediction because the pace is accelerating and someone's going to be next in line. Here's the bottom line. 2026 isn't about speculation anymore. It's not about price predictions or moonshot timelines. It's about infrastructure deployment at scale. Everything Brad discussed at XRP Community Day points to the same conclusion. The setup phase is ending. Ripple has dual regulatory approval. They're in conversations with the Federal Reserve about infrastructure upgrades. The Clarity Act has a 75% chance of passing by end of April. According to Brad, institutions have been testing for years and are waiting for the regulatory starting gun. Ripple has explicitly stated that XRP is their North Star, their reason for existing, and every product they build is designed to drive XRP utility and liquidity. Major institutional players like Aviva are tokenizing hundreds of billions in assets on the XRP ledger. The fundamentals are strengthening while prices remain disconnected. That's the opportunity window. Brad said it himself, the reality he's describing hasn't caught up with how crypto assets are priced yet. That gap is what creates asymmetric opportunity. For retail, this is the one shot to own part of the new financial rails before institutional control becomes total. That's not hype. It's structural. The infrastructure is being built right now, and the asset that powers it is available. Brad's message to XRP holders was unambiguous. XRP is Ripple's purpose, not just a tool. Everything they do is in service of the XRP ecosystem. If that's the case, and if Ripple executes on becoming the financial infrastructure platform they're positioning as, the next 12 months will define the trajectory for years. This story is just beginning. We're moving from setup to execution, and every major development matters. Subscribe so you're tracking this in real time because the pace is accelerating, and the next announcement could be the one that shifts everything. I'll see you in the next breakdown.